Hey guys, we're literally going to be doing the same thing we did last video. We're just going to be going through the entire trade from top to finish on how to take the trade on the day. If it's not going to be a good trade to take, we're still going to take the trade, but I'm going to show you everything to look at if it's not a good trade to take. Okay, here we are with gold. We're going to go first to the hourly. We're already there, and we're going to, like I taught you guys before, we break it into sessions. Okay, on the day. That's London session. That's New York session. Then we go to Asian session, okay? Just gotta mark that out. Okay. I don't know if that's not Asian session. That's Asian session. Okay, cool. Come and get your love. Sorry. Yeah, you guys like my singing. Everybody loves my singing out here. Come and get your love. I don't even know if I measured these sessions out right, guys. There's something going on here. Thursday at 12. Okay, that was cool. That is London session right there from 12 to 8. Sorry, not London, Asian session. London session is 8 to 4. That's where I messed up. Is 8 to 2. I see that? No one told me I messed up, man. And 2 to 10 usually is your New York session, but since it was market closed early, but that's okay. Okay, guys, those are our sessions, right? London, Asian, New York. I don't know why I made a list there. Remove that. Okay. Now that that's done, we go ahead and we're gonna go pick our bias for the day. Go to the weekly. Bearish on the weekly. Bearish on the daily. Just to show you guys real quick, how do we know if something's a break of structure? Right there. If there's a candle closure below or a candle closure above. Okay? That's when we know a break of structure is taking place. Okay? It's nothing fancy. A break of structure is a one candle movement. You guys are looking for some beautiful by the like the rule book movement of stocks. That's a movement of stocks. Yeah, that's not how things work, guys. It's one to one. You look at one candlestick at a time. You do not get ahead of that. Okay. On the 4 hourly we were bearish. On the hourly we were bearish. Okay, so now we have a daily bias of sell, right? Now we're gonna go and find our trend. Going into New York session, I only trade two sessions. I trade New York session and I trade London session. The reason for that is this is what this is the reality right now that I want to show you guys of Asian session. And the reason I don't trade Asian session is this: it's very volatile. There is no indication of when it's going to break structure and start moving in a different direction, right? So right now every indication shows you that gold price is moving up, and even if you went into the dailies, the weeklies, and everything, your bias will be going into that favor. But all of a sudden in Asian session you will just have one hit area, like this area, where the volatility, and that's where you lose out, because now your take profit would have been here. Previous areas of liquidity, you would be so close on your take profit, and then you're going to start moving towards, my bad, you're going to start moving towards losing money. Now if you are a trader, yeah, you would get up to that high again, but you were never going to cash out, right? I don't swing trade. I don't believe in swing trading. The reason I don't believe in swing trading is I think I never want to be in a trade for that long, because the longer you're in a trade, the more exposure to volatility there is. Okay? And in swing trading, they take interest charge. So haram. Okay? Okay. Asian session, what we're gonna do? We're gonna find our trend. Okay, so going into London session, we can see that it was against our buys, so our bias, so we should not be trading London session. But gold and New York session is according to our bias. So we have a break of structure somewhere in there that we're gonna find once everything is proven, where we set and we're gonna find our take profits and we're gonna do everything, but we see the trend is starting to move down. So that's higher highs, higher lows, higher high, low, lower high, lower low, lower high, lower low, lower high, higher low, lower high, lower low. That's just a reconsolidation, right? On the 5 minute or the 15 minute or the 20 minute. It doesn't really matter. You're always gonna get these things where all of a sudden a lower high comes in. This is the game of nerves, man. You need to know how to hold them. And then if it breaks structure that you have, that this would have been, then you got a higher high, right? And then a higher low, and then a higher high. That's when you pull out the trade, right? Now you're playing the losing man's game, right? But since this one it was a higher high, higher low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high. So that's what it is. You need to be able to play emotionless. You need to be able to make sure that all your confluences are being seen. I'm not pulling out of a trade just because it's broken structure. It's gonna break structure, right? But if it's showing me that it's totally going towards a different trend, then I'm out of that trade right away. We can go over this in more detail next video. I can show you. We can actually spend 10 to 15 minutes of how to know when a trade is going south. Okay. Okay, so now that we've picked up our trend, we're gonna go find a liquidity sweep on the 1 hour. So that's basically where I set my stop loss. And to see when price is about to move down. So we have liquidity sweep right there. We have a liquidity sweep right there. That's not a liquidity sweep. So we have a liquidity sweep right there. We have a liquidity sweep right there. So I'm gonna go realistically. That's how tight your stop loss needs to be right there. That's my stop loss. If I'm entering that trade, that liquidity, because if it passes that on the 1 hourly, that means that my reading was wrong, and I should be stopped out before I lose any more money. We're going to now look. Now we got the daily bias, trend, liquidity sweep. We're gonna go look for an order block to help for entry purposes. Remember what I've taught you guys this so many times over now. For us, order blocks are just to help us at point of entries and point of exits, right? That's all order blocks because price is attracted back to that spot, right? That's my order block due to the reason that up, this is the down movement, up movement, down movement. Sometimes an order block can only be one candle too, depending on the order block. This could be an order block, right? This is just, they're everywhere, guys. They're literally everywhere. All you need to do is find the one that works for you. Okay, now we're going down to the 1 minute. Like, we got to get really precise with this shit, man. I can't stress that enough. Money is there to be made, but you need to have the confidence in your ability to look at this shit emotionless, right? Now, what can we see? Higher highs, higher lows, high, low, lower highs, lower low, lower high, higher low, right? So trend is being broken. We're just getting some choppy action in the order block. Now, I want to see when this is going to be attracted to outside the order block. Right here. This is my area to find my entry. Now, do you guys see this? how price is coming once it's exited the order block, it's coming in of to the order block, touching it, leaving, coming into the order block, touching it, leaving. So this is what you call a consolidation period where orders need to be filled inside of the order block, okay? Now I'm going to wait and find where is my entrance point. I'm not interested too much in. A lot of people will ask, why don't you trade off? Why don't you enter off of this? It's just risk tolerance. My risk tolerance is very, very, very low. You could make more money, yes. It would, in this trade, specifically make you money. But if you trade right off of that without waiting for it to exit the order block and touch into the order block again and again, you are going to lose more trades than win. And our thing is this, is we are strictly, we do this emotionally. We have a strategy. This is how we plan it. And this is what I need you guys to do is hit the charts, plan your strategy, right? Your strategy will be different than my strategy, but I don't trade off of that. Now, we're looking for our entrance point. We pull out the GAN box. Once it comes into this order block here, because price is done reconsolidating, that's when I'm looking to enter this trade, right? I see that I go below equilibrium. I haven't broken structure. I'm probably in this trade right here. This is when I've entered this trade. Realistically, because what I'm looking for is a break of structure. So this here, I broke structure here. Honestly, I'm at this trade here. Because this is where the structure got broken. I look for confirmation on the 5-minute in that area. Yeah, structure's down low right here. I'm in this trade, and then you guys can see how much money there was to be made here, okay? Remember, this is my stop loss. This is where I'm entering the trade. So I'm taking another short. Stop loss. Probably this would, now we still got to measure previous areas of liquidity, guys. Remember, now I would just be speaking on absolutely out of my ass. But previous areas of liquidity, right there. There you go. If I could find a previous area of liquidity there. Right there. Do we touch that? Yeah, maybe if I would have stayed in the trade. And then you never know. Sometimes I'm in these trades longer than expected, but that's not swing. That's still not swing trading. That's just an all-day trade. Okay? So I'm gonna say two 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 take profits. We're gonna base it off of the second one because I'm a G like that sometimes. Okay? Actually all the time. Okay? 0.896% exposure and risk reward ratio is 1.46. Profit loss is 3.93. Guys, winning trades, man. That's what it is. Just winning trades. All right? And you would have smashed this gold trade. If you took this gold trade, you would have smashed it. Right? And that's what it is, guys. Another one done. That's the strat. Next time we're going to go over how to, same kind of concept of it, but we're just going to go over also how to know when to exit a trade, okay? Because sometimes trades go south and you don't want to hit your stop loss just because that's just extra money on the table, so you just walk out, okay, guys? So deuces, peace out, assalamu alaikum, done for the day. Guys, 3 videos left now. We got one more trading video, one psychology video, and the end. It's over after that, guys, okay? Congratulations on making it this far. Just a little bit more to go, okay? Peace out, boys.